The Senate Banking Subcommittee on Housing, Transportation, and Community Development. Let me call this congressional field hearing to order. Let me first thank the Black United Fund for hosting this field hearing, an incredible organization that has assisted over 700 community-based organizations in their mission, touched upon 16 of the 21 county health and human service agencies that have received their support, whose goal is to enable individuals to help themselves create a better sense of self-worth and a better self-identity and ultimately self-sufficiency. And we thank them for hosting us. I just had the privilege of meeting over 100 of the young students who are taught here every day in the preschool program, and they had a lot to say. They were a happy group, so it started my day exceptionally well. It's good to be home in New Jersey. To welcome all of you to this discussion on how we save our neighborhoods from the problems of foreclosure, how we can help homeowners deal with foreclosure and communities deal with the blight of foreclosed properties. Let me begin by looking back to the time when I was growing up in New Jersey. It was and still is a place where people work hard to build a better life for themselves and their families. The economy was expanding. We enjoyed a vibrant, prosperous manufacturing base that provided jobs and turned into lifetime careers for millions of Americans. Middle class was thriving, and it was everyone's dream to own a home. And buying a home was a personal accomplishment, a family triumph. It was a time in America where government and the economy supported a growing middle class. Banks were more local, not global like they are today. A time when they had a stake in each mortgage in the community they served, and they knew their customers personally. Times have changed, and some say the old American dream no longer exists, but I think they're wrong. I believe that America's middle-class spirit, that hope for a better life, is still alive in the hearts of every family here in Plainfield and across the country. So today's hearing is about more than numbers and statistics, more than the fact that 1 of every 10 homes in Plainfield is in foreclosure. It's about values, about people and families and our communities and what we can do to help. It's about finding opportunities to mitigate the foreclosure crisis, but most of all, it's about hope. Hope for Plainfield, for New Jersey, and for every American family and neighborhood that has been hit hard by the mortgage crisis and struggling to stay above water. Having said that, today we'll be hearing from 6 witnesses on how to best alleviate the burden of foreclosures and how we can mitigate the impact of foreclosures on our neighborhoods. Today I hope to hear not only how we can streamline the process and make it as fair and as painless as possible for homeowners, but how we can help communities like Plainfield deal with the vacant houses that exist, whether that be incentives for conversion to rental, or in some cases where there are other resources for the community would make sense. Today I'd like to hear outside-the-box ideas on what creative solutions our witnesses may have and what the possibilities are. We've already made some inroads, but there is much more we can do. As chairman of the subcommittee, I've held multiple hearings to find ways to get the housing market back on track and create jobs. We have investigated bank practices to hold them accountable, sought ways to expand programs to help struggling homeowners deal with an overly cumbersome and complicated process. I've worked to bring home millions of dollars to the Garden State for the construction of affordable housing units throughout the state, and supported legislation to create a homeowner advocate to be a one-stop shop for homeowners looking for help. Most importantly, I've supported efforts to hold banks and the government more accountable for their actions and to protect homeowners from predatory practices, lender indifference, and untimely and unreasonable demands that make a bad situation worse for families already struggling. And looking forward, I propose my own comprehensive action plan that will address all aspects of the housing market. And I will also be working with President Obama to put his housing plan into action, both of which will help New Jersey families stay in their homes. And I hope our witnesses will touch on aspects of this plan in the course of their testimony. also wanted to mention that the settlement between the state attorney generals and big banks came out yesterday, so this hearing is very timely. While the $26 billion settlement helps homeowners, it is a long way from healing the grievous wounds left by the crisis in deceptive mortgage practices. When I think about $700 billion nationwide underwater, $26 billion may be welcome, but it is not even 10% of that challenge at the end of the day. There is still more that has been done, that can be done to help homeowners who are wronged by the foreclosure crisis, and will also provide, I hope, greater stability to the housing market and improve the overall economy. Specifically, we cannot address the basic foreclosure issues for families if we don't first eliminate arbitrary barriers imposed by lenders that prevent homeowners who are underwater from refinancing at a fair interest rate. That's one of the first things we need to do. And while we have eliminated many of the barriers already, more needs to be done, and we look forward to working with the administration to do just that. To make sure that all responsible homeowners who should be able to take advantage of our historically low interest rates, but unfortunately are not allowed in many cases to do that. This was the subject of a hearing yesterday in Washington of the full banking committee, and it's something I look forward to continuing to pursue. I look forward to working with the President to help families here in Plainfield and across the Garden State by establishing a set of fair national foreclosure standards to ensure that no bank, no lender is allowed to foreclose on a home without following proper procedures and producing proper documentation. Nor should they be able to foreclose on a property without making every effort to modify mortgages so a family has a reasonable expectation of having a chance at staying in their home. Homeowners should have the benefit of a single point of contact for loan modifications to ensure continuity and certainty in finding their way through what is inevitably, no matter how many safeguards we implement, an emotionally difficult process. And my office has dealt with this many times in our assistance to homeowners working with lenders on loan modifications. And very often that process moves from one person to another and creates an incredible challenge to that family trying to modify their loan. I also believe there should be reasonable limits on foreclosure fees, and that there should be a fair appeals process for those denied loan modification to ensure that families get a fair shake, not just a quick rejection. Fraud and homeowner abuse through service errors is also a problem we must address. Miscommunications, illegal mobile signings, which have sometimes resulted in wrongful property loss, are simply unacceptable. Because the process has proven to be so cumbersome and many times so callous, I strongly support foreclosure counseling to help guide homeowners through their options to keep their homes and make a smooth transition to the next option. In fact, that's why I joined with others to send a request to Senate appropriators requesting a restoration of funding for HUD's housing counseling program that was eliminated in the fiscal 2011 budget to avert a government shutdown. And while we did not get all of it back, we got most of it. And that is certainly an important outcome because, in my view, cutting housing counseling funding is a huge mistake when we have record numbers of foreclosures. And we know that homeowners who get housing counseling advice are much more likely to get a modification and stay in their homes. We also need to help neighborhoods recover from foreclosed properties because the consequences are not just to the families, of course, in the first instance, who face this incredible challenge. But when you have a foreclosed property and that property remains vacant, mayors face the challenges of that reality, the attraction very often for it to become a challenge, a nuisance in the community. And when multiple properties are foreclosed, it devalues the values of other properties in the neighborhood and sends a spiral downwards in terms of property rateable basis. That is a challenge. So we have requested $215 million for the Neighborhood Reinvestment Corporation to rehabilitate and preserve existing buildings, and why I support that neighborhood stabilization program to rehabilitate foreclosed homes. Clearly here in Plainfield and in every community, foreclosed properties are having challenging effects not only for the families who have to move, but for their neighbors. Sales of these properties at bargain basement prices depress the value of neighborhood homes, are often vandalized, become eyesores, and attract crime. This begs the question of how we can quickly and easily turn foreclosed homes into one option, being rental properties. I believe we also need to have a discussion about what other opportunities there exist. Lastly, I am introducing today legislation that seeks to create another opportunity for families under shared appreciation mortgage modifications. We need to help homeowners who are underwater through no fault of their own, but can be responsible borrowers. Because they owe more than the house may be worth, they are more likely to allow the property to go into foreclosure or walk away completely. They need help and hope for a solution that allows them to remain in their home. That's why I've introduced the American Home Ownership Preservation Act of 2012. Most banks still won't reduce the amount that homeowners owe on their loans, so I believe we need to use shared appreciation mortgages, which is a creative way to reduce mortgage debt that is both fair to the homeowner and the lender. Under the proposal for homeowners who have lost their jobs or experienced a hardship, banks would be required to reduce homeowner mortgages to 95% of loan-to-value ratio over 3 years and immediately lower the homeowner's payments, provided the homeowner continues to make reduced payments. In exchange, investors or lenders would get a share of any appreciation in the home's value when the home is later sold or refinanced, equal in percentage to the amount of principal they reduced the home by in the first place. This approach provides hope for families who have seen the value of their home plummet through no fault of their own, so that they can remain in their homes if they can still responsibly make payments. And this is not some academic idea hatched in a laboratory. This modification has already been tested by private companies, and it works. In fact, there is a homeowner here today who received this mortgage modification and is still in their home because of it. Mr. Igor would be more than happy to speak with any members of the press or anyone who wants to understand how it works in real practice. He's in the audience, and we appreciate his willingness to speak to anyone at the conclusion of this hearing. The Shared Appreciation Mortgage Modification Act of 2012 is only one tool needed among the tools that I have been encouraging. All options should be on the table. I hope we'll hear many more today, because doing nothing about foreclosed properties, doing nothing to help communities like Plainfield through this crisis is simply not an option. It is unacceptable for me for homeowners to wait for years for the market to hit bottom. Some suggest that it has, but it seems to me that we just can't wait for the market forces to take place. We need and can do much more. So let me introduce our witnesses for today. Let me welcome Assemblyman Jerry Green, who is currently serving his 11th term in the New Jersey Assembly. As Speaker Pro Tem, Assemblyman Green serves the 22nd Legislative District, which includes this great community. He is also Chairman of the Assembly Housing and Local Government Committee. We look forward to his testimony and his initiatives. Let me welcome our host Mayor Sharon Briggs, Mayor of Plainfield, who has represented the city in so many capacities and is the past president of the Board of Education here in Plainfield and the past president of the Plainfield branch of the NAACP. Thank you for hosting this here. Christina Garlick is the Chief Executive Officer of Brand New Day, a nonprofit community development corporation which provides programs and services for individuals, families, renters, homeowners, micro-businesses, and supporters of low to moderate income population in New Jersey. We look forward to her insights. Phyllis Salowe-Kaye is the Executive Director of New Jersey Citizen Action. She leads the largest HUD-certified counseling agency in New Jersey that is helping thousands of borrowers to navigate the complexities of saving their home. And we appreciate Phyllis's testimony at my last field hearing Hackensack last year. And Mr. Meyer, who is the president of New Jersey Community Capital, a nonprofit community development institution that provides innovative loans, grants, and equity to organizations that support housing and sustainable community development ventures that increase jobs, include improve education and strengthen neighborhoods. And finally, let me welcome Professor Alan Mallach, a senior fellow at the Brookings Institution and board member emeritus of Housing and Community Development in Newark of New Jersey. He is a widely known, respected advocate, speaker, and writer on housing and urban policy issues. So my thanks on behalf of the committee to all of you. We are, as you may see, we have a Senate recording of the testimonies taking place. There was Senate Banking Committee staff here, so your testimonies will be fully included in the record. We ask you to summarize it in about 5 minutes so we can have some conversation. And the testimony will give rights to dissemination on members of the full banking committee as well. So with that, Assemblyman Green, I know you have a schedule that may bring you to Trenton, so we're going to ask you to start off.
First of all, thank you, Alan.
If you would use the microphone for the Senate tonight.
Can you hear me now? First of all, I want to congratulate you for bringing this meeting together. It's long overdue. Some of the topics that you have touched on here in the state of New Jersey, as Chairman of Housing and Local Government, we have begun to move in that direction. Currently, we have some proposals together with the Senate, working with Senator Leslie Act that deal with foreclosure, and we're hoping and confident that the governor and his office will work with us. So today's meeting and your approach is something that publicly I want to acknowledge is well overdue and is needed. What I had found last year when I dealt with some of these housing issues was a lack of communication with Washington, Trenton, and even local. And we have tightened that up. I had the ability as chairman, when we were talking about affordable housing, to go around the whole state and hold such meetings. And we realized that there is a shortage of housing, but also there's a shortage of dollars. And there are municipalities in the state that have money already set aside for some of the things that we're not talking about. So what we're planning on accomplishing with this new bill that we'd like to work with the governor with was now to tie in foreclosure. We feel it's important that we keep the family in a home, because once they lose their home, they become not only problems in the community, but the home itself becomes a problem. And this is workable. Our policies in the past dealing with housing is not worked. For the last 25 years, we have not seen anything accomplished. We're not talking about a lot of new homes when we talk about affordable housing. Because here in my district, even in the city of Plainfield, we have enough housing. It's a question, how do we keep people in the housing? So it's important, as I listen to your remarks, that we include the banking industry, we include governments, and we include the community. Because at the end of the day, the bottom line is that these people have to have some place to live. So I don't want to get too far into what I consider negotiation that's going on with the front office for foreclosure, but I'm confident that in the next couple of weeks, the Senate and I will be making an announcement. And I'm so happy to be able to go back and report to the committee that you are a step ahead of us. And we're just so happy that we have a senator that really understands these issues. But these are human issues. We're not talking no longer about poor people. We're talking about middle income people who have lost their jobs. They can't afford the mortgage that basically they were put into. So we're not looking to hurt the bank. We're not looking for the government to bail out. But I'm hoping that this year with the budget, we don't have to have that as a line item. What we need to do is make sure that dollars that are set aside for housing go towards the project that you're talking about this afternoon. So I'm looking forward to the questions from the community, and I'm looking forward to this dialogue with you, because it's obvious you're going to be a very important part of how New Jersey moves their housing industry. You can look at some of our urban communities like Camden and others, it's obvious their problems are a lot more serious. But as I had staff give you the numbers here in Plainfield, it's workable, it's durable. What I see was 5, 6 years ago, people put in positions that even the realtors in the bank realized these people could not survive. We cannot allow that to happen in the future. So we have to have policies set in place that banks cannot take advantage of the community. Because at the end of the day, what happens is what's happening in Plainfield. Right now, the banks own about 125 homes. Right now, we have over 500 homes on the books that can go either way. Again, this across the whole particular city. It's not just one part of the city anymore. But also, I would like for you to make sure in your approach to this whole issue that we don't have people take advantage of the system. Whatever dollars come in, we want to make sure those dollars go directly to families to help them bring down their mortgage, give them another life. Not have loose policy like has been in the past. We're giving some put together. End of the day, the public gets hurt, and we right back where we started from. So again, I'm happy to be here with you today, and I'm confident over the years you and I have worked closely together, and I'm confident before Ray and I roll out our foreclosure bill that we would love to sit down with you and make sure we're on the same page. Thank you.
Mayor Briggs.
Good morning. Good morning to everyone and welcome to the City of Plainfield. I'm Sharon Briggs, to Senator Menendez and Assemblyman Green, as well as all of the dignitaries here on the panel, as well as to Ms. Sandra Clark, who welcomed us here to this facility, and I see members of the Plainfield Housing Authority, HUD, Faith Bricks and Mortar, and the school district, and many of One Stop, and many of our partners, Union County representatives here. I want to put on the record very briefly, Senator Menendez, that first of all, Senator Menendez is not a stranger here to the city of Plainfield. He's come here often to discuss many pertinent issues and ideas affecting not just the people in Plainfield, but throughout the entire state of New Jersey, the 566 municipalities. Even came to my church with my pastor who's here today, Reverend Tracy L. Brown of Root Fellowship Ministries. You may remember her as well, Senator Menendez.
I can't forget her, man.
I know, either.
She gave me a blessing from the pulpit, so
excellent. She does that.
We wish her well.
Thank you so very much. And I won't forget to all the elected and appointed officials who are here today. I'm Sharon Briggs. I'm here representing and wearing different hats. I'm mayor of the city of Plainfield. I'm also here as a member of the Plainfield area NAACP, also under the leadership of Peter Briggs. I'm also here as an executive member of the New Jersey State League of Municipalities. Mayor Ondish is the president and Bill Dressel is the executive director. Also as a member of the New Jersey Urban Mayors Association under Mayor Wayne Smith, who's the president. But finally, and maybe in this particular case, maybe the most important reason why I'm here today, I'm sitting here as a homeowner in the city of Plainfield, County of Union, state of New Jersey, 216 Pemberton Avenue for the record. As a homeowner, I have to say that it has been pretty tough to maintain a mortgage on property these days. Now, I think one of the biggest problems is that, or the tie-in to the foreclosure problem, is that it's directly related to employment. You know, we have many people, not just in Plainfield, but throughout the state, who have either been laid off, fired, and or have been asked to take a reduced salary. Now, a reduced salary is one thing, but it doesn't equate to what's going on in the household. The expenses aren't being reduced, as we all know. So therefore, there is this unequal situation that's going on. I can tell you that even within my own household, my husband, who was making one salary, which was wonderful, has been greatly decreased, and I think that is something that has happened across the board. And it's not due to anything that employees or residents have done, it's just the economy. For instance, in the city of Plainfield, we lost in the last few years our biggest employer, Muhlenberg Hospital. That went down from a full-service facility to a satellite facility, and we had 1,100 employees at Muhlenberg, and we don't have that kind of staff there. Many of those individuals resided here in the city of Plainfield or Union County, and of course, without a job, it's pretty tough to make the mortgage demands. And so, again, I think that the foreclosure rate is really, really tied to employment and this economy. I'd like to speak for a moment with regard to, and I thank banking officials for being here, because I think that we need to be able to work closer together, municipalities and banking officials, because there is the modification process, but it really takes too long for homeowners to go through that process. Oftentimes I've been meeting with families who say that it's been 4, 5, 6, 7, 8 months to get a final decision as to whether or not they have qualified for the modification. I'd like to throw out to the banking world, and I know that they are proactive and they want to help people stay in their homes, and that's all of our option at this point. That's what we all would like to see happen. But I would like to ask if banking officials can please take this information, as well as our legislators, back to their bodies and discuss the possibility of forgiveness of monies, back monies that's owed on loans, maybe up to 3 months, or either put that on the tail end of a loan and allow people to be able to start over. Because assessing extra fines and things of that nature is not helpful to homeowners. And I'm sure that banks don't really want to be landlords and property owners. We have several properties in the city of Plainfield that have been foreclosed upon. And unfortunately, we don't have any way to help the folks who have been displaced, because there isn't money available to them. People are kind of camping in with other family members and doing things of that nature. But in Plainfield, I'm going to tell you briefly what we have done to try to assist homeowners is to work with organizations and facilities such as the Housing Authority, such as HUD, such as Faith Bricks and Mortar, and other certified counseling facilities, so that they can educate our community, and we've been having housing seminars. So we're going to continue in that vein. But thank you again, Senator Menendez, for bringing this issue to the forefront, because it is very vital to the community of Plainfield.
Thank you, Mayor. Ms. Salowe.
Good afternoon. I'm grateful that the Senator has made this venue available to call attention to the unfortunate situation that families are still losing their homes, and many are sitting in limbo for years not knowing their fate. Take, for example, Regina, who came to Brand New Day for help with her mortgage. She had heard about the HAMP program, and her mortgage was with one of the larger banking institutions. Her mortgage payment was $1,200 a month, and she was current until she lost her job unexpectedly. She was unemployed for 3 months before finding employment significantly less than her previous job. Unemployment and underemployment are the #1 factors facing customers who come into our office today. Brand New Day worked with Regina to submit her modification request. After 90 days, she was approved for a trial modification, and the next 120 days were spent resubmitting documents, numerous phone calls, and lots of tears as she waited for a permanent modification. 6 months of waiting to find out the fate of her homeownership status, and the memories of sacrifices she and her husband had made to purchase a home for their family were all flooding her with emotions. Thoughts of where she and her family would live if the loan was not approved, where her children would go to school, where would they play, where would they raise their children. After all, she and her husband had chosen this house, this neighborhood, these neighbors. Another 30 days went by before she was scheduled to meet with her counselor. It has now been over 8 months and still no resolution. She was saddened to hear during her appointment that the request had been denied. The counselor advised her not to give up, because in New Jersey, we have other programs. The state's mediation program would give her an opportunity to speak directly to the bank and make her case. Together with the counselor, the mediation application was prepared and submitted. More waiting. Regina's mediation date was scheduled for 2 months out, but at least she could sleep sound at night knowing that the sheriff would not show up at the door to remove her family while waiting for her mediation date. A week before the mediation date, Brand New Day worked with her to update all of her paperwork and send it into the bank in preparation for the mediation process. So Regina found herself frustrated and confused when the lender's attorney reported to the mediation unprepared and requesting that the process be continued. On many occasions, cases at mediation are continued 2 and 3 times, leaving homeowners in their houses, but uneasy, insecure, and full of anxiety. In addition, while decisions are prolonged, fees and interest continue to accrue, making negotiations with lenders even more difficult. It's our recommendation that fees and interest be suspended during the foreclosure modification process. In addition, the process would be simplified and more effective if counselors had direct access to the person who has the power to negotiate and make the decision regarding the modification. Regina finally, after an unsuccessful mediation process, said that she would pursue a short sale and put her house on the market. At that point, she felt hopeless and believed that this was her only option. The home stayed on the market for many months with no offer. There were so many homes on the market that at that time and in her neighborhood, there was extremely low demand. She finally got an offer much less than what she owed to the bank, in fact, $70,000 less. The offer was submitted to the bank and Regina found herself yet again playing the waiting game. She waited for months with no response from the bank to approve the short sale. The housing counselor at Brand New Day told Regina not to get frustrated. There's a program called Cash for Keys that we can negotiate on your behalf if you decide that you want to move out. Regina was desperate. She and her housing counselor made arrangements for the exchange. Unfortunately, the cash arrived many months after she had moved, and the funds could not be used to help with her relocation expenses. Banks should be required to give the cash within 30 days of the homeowner vacating the property. Regina and her family are now renting an apartment in another town in another community. The children are now attending school at a new school and have made new friends. There's a great distance between where she lives and where she works. The family would have been better served if they could have remained in their house as tenants. Banks should be encouraged to allow homeowners to lease back the properties after foreclosure so they can maintain stability for their family and avoid vacancy in our neighborhoods. In closing, Regina's story can be multiplied by thousands across the state and millions across the country. Many of the current federal and state programs could be more useful if guidelines were less restrictive. There are so many people that need help and their situations are so different that we spend numerous hours as counselors trying to determine who qualifies for what program and trying to qualify the unqualifiable. In addition, our counselors are an invaluable part of the process in aiding a family from the first late payment through resolution, which could mean a loan modification, but also could be transitioning into a new living situation. Funding for housing counselors has been significantly cut in the state and federal budgets. And as demand continues and in many cases increases, we need dollars to pay salaries and related costs. Banks should be responsible to assist with the cost of healing our communities. So I want to thank you for your attention to this important matter and ask the Senator that you continue to have conversations and dialogue with housing counseling agencies as we try to help families in New Jersey. Thank you.
Thank you very much. Mr. Meyer?
Senator Menendez, good morning, and thank you for the opportunity to speak with you today about New Jersey Community Capital and the role we play in saving New Jersey's neighborhoods from foreclosure, and more importantly, for your tireless efforts to advance a comprehensive housing plan designed to keep people in their homes and to fill vacant homes and to save our neighborhoods. Senator, you mentioned at the beginning that a central part of New Jersey Community Capital's work is to try to create comprehensive, sustainable neighborhoods through housing, education, early child care, business development, and the like. But what is clear to us in our work throughout the state that is without a healthy housing market, it is almost impossible to create those neighborhoods of choice. And the foreclosure crisis, as enormous as it is, has placed pressure on the abilities for neighborhoods to become good places to live, work, and raise a family. And this crisis really requires interventions and strategies across the mega community approach, right? From the government, philanthropic, private, nonprofit sector. And I would like to talk today a little bit about some of the programs we're working at New Jersey Community Capital on that are really designed to help, along with your Housing Work Plan Center, keep people in their homes, prevent foreclosure, and save neighborhoods. The first is around financing. As a CDFI and statewide CDFI, we've seen the lack of financing to groups around the state as a real barrier for groups to acquire property, to redevelop properties, and to put them back into productive reuse. And so vacant homes which strain the life out of neighborhoods in a time where there's a need for affordable housing sits vacant. We have tried in New Jersey Community Capital to create a fund we call the Neighborhood Prosperity Fund, which is designed to lend to groups around the state who can meaningfully acquire properties, redevelop them, and put them back into productive reuse. And this is a problem that's been going on for years. There's a lot of mainstream financial institutions have really stopped lending to groups directly that have real strategies to acquire and redevelop properties. Another area where it's been very difficult, because it's so difficult to qualify for mortgage financing, and there is a demand for housing, is to provide financing to groups to rent out these houses. In New Jersey Community Capital, we've been trying to provide what we call mini permanent rental financing. Again, there is demand for affordable housing, but a lack of capital to fill houses. And it's what we feel is a really important component of the work. Financing is key. Clearly, it continues to be an issue. The second is around acquisition of properties at a meaningful scale. It is clear to us that the one-off property acquisition is not enough to really save neighborhoods. Not only is it not enough, we can't rely on government subsidy as the sole source to rebuild neighborhoods. So one of the initiatives that we have developed in New Jersey Community Capital is to establish a subsidiary called Community Asset Preservation Corporation, which is designed to purchase in bulk both non-performing mortgages and REO properties, and then work with various groups, both community development groups, mission-based, for-profit groups, trying to keep people in their homes through modifications of mortgages, trying to stabilize tenant situations. We really feel that this is a promising aspect of the work. One of the difficulties and challenges that we've had, and we've started to make more progress on it, is getting the financial institutions to deal with us on a meaningful basis to acquire properties and to establish rational values for these properties. We really believe that if we were able to gain control of these, we would have an early intervention is so important, and we would be able to gain control and access to these properties more quickly. And finally, Senator, we're working on a program with our state housing mortgage finance agency. We're using some hardest hit funds that were provided by U.S. Treasury. And the idea behind this program is precisely part of your work plan about helping underwater home buyers and keeping people in the homes. Every week in this country, every single week, billions of dollars of mortgages are traded, and including in New Jersey here. And so we want to create a fund that is designed to acquire owner-occupied mortgages in targeted neighborhoods, and then begin a process of working with individual homeowners, like with our counselors like Krishna and Phyllis, to redevelop individual program plans that we can meaningfully write down these mortgages, and write down these to a point where it's consistent with the values of the house and with the borrower's income. We believe that with this program, we could probably save 2,000 homeowners over the next 6 years. So we're looking forward to continuing to develop that program and implement it in 2000. Senator, again, thank you for this opportunity here today to speak with you. It's a critical issue of saving our neighborhoods from the detrimental impact of foreclosures. But I believe that we can make more of a difference, but it was going to require both a financial and real estate capacity at a greater scale than has ever existed to date. And it's also going to require a major shift in thinking and behavior by all of us to really implement these initiatives. So thank you again.
Thank you for the insights, Ms. Salowe-Kaye.
I'd like to thank Senator Menendez for bringing Congress to Plainfield, New Jersey today. I've been the Executive Director of New Jersey Citizen Action for the past 25 years, and I served as a board member of the Federal Reserve's Community Advisory Council for 3 years. New Jersey Citizen Action is the state's largest HUD-certified housing and foreclosure counseling agency, and we're a leader in innovative projects and programs that benefit New Jersey's families, individuals, and seniors, and the kinds of things that Krishna talked about before. We see those cases in our 7 offices throughout the state, including the one that's located right here in Plainfield, New Jersey. Keeping families in their homes when reasonable loan modifications are possible, and the reform of the broken loan servicing industry should be the #1 priority for Congress. Along with that, we need to be figuring out a way, and Wayne talked a little bit about it, to preserve already existing housing that has either become vacant or has the possibility of becoming vacant. We need to find ways to keep folks in those homes so that we can preserve our neighborhoods in New Jersey. Policymakers need to apply strong mandatory standards for loan modifications. It would go a long way for the uncertainty that counselors face when the result of a modification depends on the person that they're talking to on the phone and the mood they are in that day. There must also be an end to the loan servicing abuses and poor business practices that contribute to unnecessary foreclosures. Don't be fooled by the AG announcement that was announced yesterday and announced as probably the best thing since sliced bread. The devil is in the details. The programs have not been set up from that. The implementation of those programs has not been determined. And finally, the enforcement is being left to the lenders, to the banks. It's like the foxes guarding the chicken coop. So we really need to examine that and not rest on our laurels that billions of dollars are targeted to help a very, very small percentage of families, and no one's going to jail right now. Lowering and reducing principals is also an essential part of keeping folks in their homes, and there must be a way to mandate that these principles be written down so that homes can remain affordable and the mortgages can be sustainable. Senator Menendez's program, the Shared Mortgage Appreciation Modification Act, is an example of a program that would work, should be supported, and it should be passed quickly by Congress. Opland Bank is a national financial institution that has been doing this for many years. They have 8,000 foreclosed loans in New Jersey, and they found out a way to be profitable and do mortgage reductions. So we need to make sure that that happens, and we need to all get behind this bill, and Congress needs to pass it very quickly. Treasury's Hardest Hit Fund has some excellent state and local programs. New Jersey's Homekeeper program, which provides direct mortgage assistance to folks who are unemployed or are underemployed, really needs to be expanded and marketed widely. Congress needs to support large-scale models like the Mortgage Resolution Fund that Wayne discussed. By allowing organizations themselves to apply for these hardest hit funds or other TARP type of dollars, instead of just permitting housing mortgage finance agencies to access these funds. And as long as the hardest hit funds are being recycled, as in the Mortgage Resolution Fund, Congress should not have a sunset on these funds. Additionally, incentives need to be set for servicers and banks to ally themselves with these kinds of nonprofits, and the same should be provided in bulk REO programs. Finally, HUD certified counseling agencies need to be funded to capacity. Every single program that has been discussed here today requires a counselor for a home buyer to navigate this process, and to have cut these funds is disgusting, and we all have to get behind this and make sure that funds are available to properly counsel every single person who's facing foreclosure in New Jersey. Thank you.
Thank you very much, Professor Mallach.
Thank you, Senator, and I'm delighted to be here. I'd like to start by just seconding what Phyllis said. The settlement may help, but again, the devil is in the details. But I think legislation such as the bill that you've introduced on shared equity mortgage modifications could make far more difference in the long run than the settlement that was announced yesterday, which could help, but again, is far from a solution. So I'd like to talk very quickly about 4 things that I think are really critical. First, and I'll just second what people have said, we need to reduce the number of homes that go into foreclosure. Until that happens, we're not going to be able to stabilize our neighborhoods, we're not going to be able to stabilize our housing market, and we're not going to be able to help the people who need that help. And I think the federal government has a critical role in this area. We need legislation to address the issue of principal reduction, to facilitate short sales and deeds in lieu, and provide alternatives to foreclosure. And in that light, I think one of the ironies of this huge situation is that the federal agencies control over half of the mortgages in this country and the mortgages that are in trouble, and yet consistently FHA, Fannie, Freddie, the Federal Housing Finance Agency have been more a part of the problem than they've been a part of the solution. And I think this is something where if the administration is unable to bring these agencies into the tent, as it were, I think Congress should look at what actions it can take to change the ground rules under which these agencies operate so that they can indeed be part of the solution. Notably, they're not part of the settlement that was approved yesterday. Second, people have to be able to stay in their homes. When homes become vacant, especially in inner city areas, they quickly become uninhabitable. I think Congress enacted the Protecting Tenants in Foreclosure Act a little more than 2 years ago. That was critically important, but it needs teeth. Along those lines, I'd second, I think it was, forget who among this group said it, a responsible homeowner who is in the foreclosure process but has maintained their home should have the right to stay in that house after foreclosure as a tenant, unless there is a buyer who actually wants to move in and occupy that house. That is a win-win for the family, for the lender, even though they don't seem to appreciate it, and above all for the neighborhood. And there is a bill that's been in Congress. It was introduced by Senators Grijalva and Captur, Congress members, Grijalva and Captur, I'm sorry. And it hasn't gone anywhere, but I think it really should be addressed. Third, ensure that properties are properly maintained, both during the foreclosure and after. New Jersey is the only state in the country that has a state law that puts the clear obligation on the lender that has initiated foreclosure to maintain the property during the foreclosure process. There are a number of cities that have done it elsewhere under their home rule powers, but I think this is something, again, Congress could look at, making it very clear that lenders that initiate foreclosure have the legal obligation to maintain those properties if the owners are no longer available or accessible. And secondly, throughout this country, particularly in inner city areas, lenders initiate foreclosures and don't follow up or drag it out. In many states, in many cities, lenders literally, they start the foreclosure, they hope to pick up some money from the borrower last minute, and then they walk away and never perfect the foreclosure. We need legislation that is essentially a use it or lose it bill. If a lender simply starts the foreclosure but does not pursue it responsibly in a timely fashion, the foreclosure should be voided, and in some fashion either the owner should be allowed to stay as the owner, or the responsibility for foreclosing should go to a nonprofit or a public agency that can do it responsibly and get that property out of the limbo that it's sitting. Then finally, we need to put more properties back to productive use and make sure there are ways for families to buy houses that are coming up, that there is access to mortgage funds. This, of course, goes to a huge issue that Congress is dealing with, is what is the future of the American mortgage industry going to look like? Are we going to have a situation in this country going forward where responsible home buyers of all income groups will be able to get mortgages? Or are we going to have a situation where mortgages on reasonable terms with reasonable down payments are simply no longer going to be available to people at low, moderate, and middle income? And then finally, just above all, I think this is a crisis. I mean, I've spent a lot of time traveling around New Jersey and around the country in cities and urban areas. There are neighborhoods across this country that are falling apart, that are collapsing, from foreclosures, market collapse, declining public services, the economy. If we do not do something, and do something quickly to deal with these issues, one harvest of our inaction will be the collapse and abandonment and impoverishment of literally hundreds of inner city neighborhoods and hundreds of thousands of lower income families. Thank you.
Thank you very much. Thank you all for your testimony. There's a lot of great insights here, and I want to follow up on several of them. Assemblyman, you talked about, and I don't want to get into your negotiations, but what is the hope of your goal at the end of the day in terms of the legislation that you and Senator Lesniak are pursuing in broad terms? And do you think that the amount of monies that will be coming under the settlement to New Jersey can be a source for some of what you earlier said you wanted to accomplish?
Senator, I think that we go a long way towards strengthening the pot. As you know, over the last 25 years and basically this last 2 years in the Krishna's administration, we all have agreed that our housing policy in the state of New Jersey needs to be changed. Currently, I have a bill that has the support of all the people in the building industry, the nonprofits, in terms of how we can answer that. Unfortunately, the governor has another idea. So I'm hoping that maybe we can meet each other halfway rather than have a court tell us what to do. Meanwhile, these last 2 years, the prices of foreclosure have come up. And what we're trying to put together, without getting too far into negotiations that's going on, is that some of these dollars that are actually sitting in suburban communities that can be used not for affordable housing, for foreclosure. And some of the other dollars that are generated through the ability of builders and other entities bringing money to the state, we take that money and use that for foreclosure. Right now, Senator, foreclosure is at the front. And the bottom line is that you can't continuously go back to Washington because you're doing the best you can. We can't go back to the taxpayers. So any dollars that we can generate that can go towards helping families, helping the bank, we need to make that up to our rock. It's going to be people in the building industry who we would like to put back to work. We're going to have people in the community that feel we need to be building more units, but we need to deal with the current crisis. And that's the crisis that we're talking about today.
And in that respect, Salowe-Kaye mentioned the New Jersey Homekeeper Program, which is based on federal dollars. Has the committee had an opportunity, has the state committee had an opportunity to have any hearings on that yet?
No, we haven't. The hearings that I held last year, Senator, was basically dealing with affordable housing. We're hoping that the different groups that we have met with without having hearings, including the groups of us saw, my house, the Senate has reached out for them. So in the past, I was able to reach out to everyone when I was moving my bill, but unfortunately it didn't happen with the front office. But the question you're asking me is that we're reaching out now before we finalize this so everybody can be on the same page.
So, okay, I want to ask you about that program because I'm a little disappointed that so far only 54 homeowners.
Slow start. I think there's it was even less last year. So we're better now than we were last year. As a result of, Krishna's counselors, my counseling staff, interacting with Husband Mortgage Finance Agency, they have actually changed some of the requirements of that program in order to be able to expand the number of people that qualify for it. 54 is not a good number. There's many more applications that are in. Folks need, the way it works is homeowners have to apply directly online at HMFA's website into a portal, and then they eventually get assigned to one of our agencies or another. There's other certified agencies here. So a lot of time there, but a bigger problem is the actual marketing of the program. It was announced a couple of years ago as we've got $48,000 for 2 years if you lost your job. And this was before the program was even set up. Now the program is set up, there are requirements, everybody doesn't qualify, but there really needs to be aggressive marketing and outreach on that program. Counseling agencies are being inundated by people who who have applied and then get sent to us. It's what happens after that when we submit it, which takes a long time, and how many counselors there are to put through all the people that should qualify. We don't market the program, because if we market the program, and we don't have to market the program, because we don't have enough counselors to serve the people that are coming through now. So they need to market it, provide counselors.
So if we marketed and had a lot more influx, how would we meet the challenge of...
At least people would get into the portal, and they would get into the queue, and they would eventually get seen by one of our agencies that are up here and out there today. But a lot of people don't even know that it exists, and some people come to us first, or your agency first, and they think we can get them in. So the state really needs to market it. They need to increase the number. We used to, in the old days, we now are all paid by a fee for service. For every loan you put in, you get this, that, $100 here for an intake. We used to get capacity grants that actually paid us money for counselors. We've had to we don't get that anymore. All we get is a fee for everyone we put in each part. So unless somebody's white bread money, slice of bread money, not white bread money, we're going to get a bunch of mistakes. There's a lot of places that it should go to, and a lot of programs, but some of it has to be put into actual capacity building of the already existing counseling agencies, not setting up new agencies. We don't need any new agencies. We have tried and true agencies that work. We need to be able to maintain our staff and deal with what's going to come. We have repeated.
No, I agree with you on that, which is why we fought the House provision that eliminated all the funding and got a fair amount restored, but we need to do more. I just want to make sure that after having fought at the federal level for the equivalent of what we call here the New Jersey Homekeeper Program,
Right.
that I'm glad to hear it works.
It works if we can move people through, and it works if
something
we
we need to pay, something we need to pay
attention.
attention on. Maybe the Assemblyman can help us with that too.
With all due respect, Senator, these last 2 years, as you all know, the Department of Community Affairs have changed hands. We now have a new commissioner, and unfortunately, the other commissioner is setting everything up. It's like starting all over again. I feel that we need to put some safeguards in it. When federal dollars are sent to New Jersey, that those dollars go directly to where they need to go. And number two, you have the staff to make sure the job is getting done, because that's the problem we're running into, exactly what she's telling you today. It just seems like it's kind of on karate.
Well, I know I wrote several letters to the New Jersey Housing and Mortgage Finance Agency saying we have the slowest start in the nation, so we need to get it going, because we fight for federal dollars and then we want to see it effectively used here on behalf of people. So I hear some of your suggestions and follow up on it. Ms. Garlick, I heard your story, which is, of course, one of your clients, which is pretty telling of the challenges. Is it your experience that she didn't end up with a successful modification, but is it your experience that when you have a mortgage counselor with a client, they are more likely to succeed than not? Would that be true?
That would definitely be true. And I think kind of the message in this story is that emotionally, this is going through foreclosure is a very stressful time for a homeowner. And so when the banks are taking a very long time to make a decision regarding a modification, and we go through the 90-day trial, and then the additional time to wait, and then all of the programs that we have in place, and the time it takes for people to be able to move through these programs, that there are a number of people who will end up with a successful modification, but then there are a number of people who have to look at alternatives. And the counseling agency does not walk away from a person if a loan modification isn't what happens at the end of the day. We will stay with someone all the way through whatever their transition is. And so when we talk about being fairly compensated for the work we do, that's a part of the work that we're not compensated for. It's something when we talk about being able to really support us from an organizational perspective and be able to support the folks that we're paying. We are there for the person through the entire crisis, whatever that is. And we need to be able to to be able to get supported for that work.
One of the suggestions you have is interesting to me, that the counselor have direct access to the lender. Can't a bar give you some power of attorney or
Yeah.
some authorization to do that, or is that still an impediment?
So really what the problem is that the person who the counselor may be speaking to on the phone is not the person who's going to make a decision about whether that loan modification was approved or not. And so you spend your time, or the counselor spends their time on the phone, and Phyllis said, what mood is the person in today? How are you going to apply the guidelines today? And so really wanting to be able to have access to someone who is going to make the final decision.
The thing about that is counselors, counseling agency, we all have the secret super duper numbers that the person in the street doesn't have. So we actually get to what they consider to be the best, the lender considers the best person. And we even have people above that if it's really outrageous. If it gets to Krishna or I as a problem, we have somebody who can pick up the phone call. The problem is that on the final workout, it's the investors, because the loan has been sliced and diced so many ways that the secret super duper person is not the person who signs off on the modification. They have to go back and talk to whoever owns the loan. And we never see those people. The only time we have a connection is when we show up in a mediation in court and the lawyer for this is on the telephone. So we never even see your face. That's the process of the state mediation. So it's not that the lender, we got better numbers than somebody who just calls us numbers that are in the newspaper today.
So that, just for the record, that's when we're talking about mortgages that have been aggregated, then securitized, sold in the marketplace, and there's all different investors in it, and hence the slice and dice.
Right, and that's the majority. Those are the ones that are the hard ones.
Is that in part why you talked about aligning servicer standards, certainly with servicers' incentives, with seeking the remediation?
Yes, and actually, the president has just in his recent announcement, he talked about, and we haven't seen the details of it yet, sort of mandating that those servicers, the GM, the Freddies and the Fannies and whoever else is owning these loans, that they comply and come to the table. But unless there are standards and that we all know it, we're spinning our wheels, because 8 months is a short amount of time for a client, and they all stay on our books, and 936 days in New Jersey to go from filing of a foreclosure to the sheriff comes. That's about the average length. We're the longest in the country. And so we have to stay with that client for 936 days, unless they leave and we can't find them.
Mayor, I know you want to say that. I also wanted you to, while you're making your comment, I want to ask you a question to briefly go on Mr. Meyer, and that is, give us a real-life consequence of multiple foreclosures in the community. What's your challenges as mayor?
Thank you. Senator, first, thank you for your bill. And I also wanted to acknowledge something that the panelists said in reference to the money needing for counseling. That is an absolute true statement, because people need to be apprised of their rights. They need to understand what the process is, if they're in foreclosure or going through foreclosure. To your question, Senator, I can tell you that foreclosures not only affect the household or the homeowners who are suffering through their foreclosure, it also affects their neighbors. Because now once that property is foreclosed on, their property more than likely is boarded up and in a neighborhood next to houses that are not foreclosed upon. But if those families in that block they have a foreclosed property there, if they want to sell their property, their value has been diminished. And so therefore their property on the bad side of the loan. So they're trying to sell their property, and the value has gone down, and the amount of money that they need to satisfy their loan is not going to be available to them because of this foreclosed property right in their block. And then, of course, on a municipality level, if you have foreclosures in any municipality, that brings down your tax rates, and it also brings down many of your property values in the city or any city throughout the state of New Jersey. So it's been a real downfall. Foreclosures not just affects, again, the family that's going through, but it affects everybody.
Has it been your experience that a finalized foreclosed home now, with no family inside, has it stayed vacant for a long time?
Yes, we have many vacant properties in the city of Plainfield, and that lends an opportunity for crime, for vagrancy. In fact, I think we did have a property in Plainfield that there was a fire for that very reason. And I did hear reference to the fact that when there is a foreclosure, that banks should maintain the properties. And I would hope that they, from this point forward, will be encouraged, please, to do so. Because we've had properties that we basically have to put liens on, and financial institutions are not upkeeping what's now their properties. So we need them to do that so that our property values will be maintained at a certain level.
Mr. Meyer, I wanted that as a prelude to some of your comments about acquisitions of property at scale. There's been some suggestions in some of our hearings that we look to create tranches of properties and sold to potential investors with an understanding that they move into a rental prospect for a period of time. Is that something that, in your experience, you would find desirable? If so, how should that be structured? And do you have any views in that regard?
Yes, Senator. Before I answer, I just build on the mayor's question. For some of the neighborhoods where we've studied, when properties go through full foreclosure, they sell at normally 60 cents of what an average median sales price would be in a lot of these areas. So it has a really devastating effect on foreclosure pricing in a particular neighborhood.
I guess anyone else in the neighborhood looking at that sales price could use it as comparable to file a tax appeal.
That's one way to look, but it's still
Not that I want to create that. But it is the reality of the possibility.
That's right. So, but to answer your question, Senator, yes, we believe that a bulk acquisition of REO properties for rental programs is a really a strategy that we should be actively pursuing. Because again, we see a demand for housing, we see a demand for affordable housing, rental housing. But the reality is that we need to get control of these properties. I'll give you an example of one we're working on. We are in the process of acquiring roughly 40 mortgages from a major financial institution. They're all in targeted neighborhoods. They're not performing mortgages. 20 of the people are still in their homes, owner-occupied. The pricing on these mortgages are less than 20 cents on the dollar at this point in time. The banks will not write down the mortgages because of moral hazard issues, which is, it doesn't make sense to me that they're willing to sell to us for 20 cents on the dollar. But, the reality is if we get control of these properties, we can not only work with the homeowners who are in there and write down their mortgages meaningfully, because we don't have that issue in terms of worrying about investors and things, because we're the owner of the mortgages, and that's something we're working on. But also it gives us an opportunity of early intervention to be able to get control of these properties when they become vacant, be able to develop some other strategy to build houses, to build vacant. But when you wait, as in New Jersey, 800 days to go through a foreclosure crisis, nothing good happens. Time is behind us. That's why it's so vital to get these.
Your answer is raises two questions. It seems to me that, first of all, the biggest holder, as I think you mentioned, is the federal government, therefore all of us as taxpayers through Fannie and Freddie, about 50% of all mortgages. And one of my challenges, maybe Professor you want to talk about this, have a comment about it, is I have been pushing Fannie and Freddie to, in one case, allow refinancing to take place. Because you're either going to preserve your corpus by foreclosure or refinancing. And it seems to me, the point you just made, I don't quite understand if you're going to foreclose and then sell at 60%, why wouldn't you readjust? Moral hazard is also for those who created the lending products and drove people to mortgages they should have never been. That's a moral hazard too, in my view. So the question is, shouldn't we be also having the major institutions that are the backers of over 50% of all the mortgages in the country allow refinancing to take place as one element at the end of the day, of permitting a responsible borrower at present rates to be able to stay in their home and create a good foundation of the marketplace. Is that something that's desirable?
Absolutely. I'd just like to add to Wayne's point in terms of bulk sales. And I think I'm very comfortable if New Jersey Community Capital buys a pool of mortgages and is responsible for those houses. I am scared as to what might happen if Fannie and Freddie start doing bulk sales to people who have not been thoroughly vetted as responsible landlords and owners and are not absolutely locked into maintaining all their properties. I mean, that we've got a lot of history in this country already with bulk sales of people buying distressed properties, triaging them, cherry-picking them, walking away from thousands of properties and ending up making neighborhoods worse. So I think the idea of bulk sales can work, but it can only work if it is done extraordinarily carefully and to make sure that the properties get into the right hands on the right terms. And along those lines, I think, to my mind, and again, sometimes I just wonder who is doing the thinking for some of these organizations. From a standpoint of long-term financial stability and liquidity, for Fannie and Freddie to reduce principal and refinance at reasonable levels makes more sense for their long-term balance sheets than to foreclose. It may not make more sense for their balance sheet in this year's budget, which seems to be the only thing that's on the table. But it makes far more sense, and again, from the standpoint of stabilizing the housing market, keeping people in their homes, stabilizing neighborhood property values, and so forth, it'll end up having far more positive impact.
That's one of my challenges with which is Marco. His idea of conservatorship is, I think, outside of where we need to be. And I'm wondering if any of the panelists who may have read this, but it's pretty remarkable to me. NPR and ProPublica had a story that I pursued yesterday. Maybe the reason that they are not allowing refinancing to take place is because they've actually taken positions in the marketplace where they, in fact, are betting that their owners, their homeowners and their borrowers are going to be stuck in the higher interest rates. And it boggles the imagination why you would make an investment decision that you can affect the outcome of and not want that decision to pay off. Why would you make a bet that you don't want to pay and therefore very well affect your policy decisions, which would therefore be, let's not allow them to refinance because I bet that they will be more likely to be in the higher interest rates than a refinance rate. Why would I not want my bet to pay off? Am I missing something there?
It's unbelievable. I'll just add along similar lines that the lawsuit that DeMarco brought against the city of Chicago, which enacted an ordinance holding lenders liable to maintain properties during foreclosure. And the lawsuit was brought saying that in their judgment, Fannie and Freddie have no legal obligation to comply with local ordinances requiring them to take responsibilities for their properties. Now, it's conceivable that he may be right on the law, that it's preempted by federal law, but it is appalling from a policy standpoint that the federal government would take the position that they have no obligation to maintain the properties which they are legally responsible for.
I agree. Let me go back to Mr. Meyer, and then I see the Assemblyman wants to say something. Going back to Professor Mallach's question, which I have raised as well, in terms of putting tranches of properties together to get the REO moved and get people for affordable housing rental, and also remove that element of the housing market so you might get some upward mobility, it is important that the conditions of how that is done. Because working with an organization like yours or Brand New Day or Citizen Action, that brings a certain reality of community-based understanding of the properties involved. But if it is just done strictly on an investor basis without those connections, isn't that a challenge?
Very much is Senator, and that's one of the things with the model that we have developed with the Community Asset Preservation Corporation is to try to acquire these properties in bulk and then develop different exit strategies as appropriate. And the primary one is to work with our community development partners, to work with municipalities, and in certain cases work with mission-based for-profits that we have vetted, that we feel that they're aligned to the work that we've been able to do. And we have done that in some of the work that we have done before. So, and the other part, Senator, which I think is really important, and I can't underestimate it enough, can't stress it enough, I should say, is that with dwindling public resources available, housing production subsidies going down, that it's vitally important that we figure out ways that we can gain positions in these properties to still be able to achieve our goals of decent housing and neighborhood stability. And by being able to purchase properties on a meaningful scale in a bulk, which you achieve a certain amount of discount, a certain amount of level of price adjustment, it serves almost as an acquisition subsidy that allows you to develop these different exit strategies without the heavy use of government subsidy. So that's why we think it's an important opportunity as this program is designed, and that be taken into consideration in working with organizations like New Jersey Community Capital, Brand New Day, New Jersey Citizen Action. If I could just add one other point to your point about the DeMarco, I had heard the same thing, and I was talking to somebody about it. They said, well, at the Federal Housing Finance Agency, the conservator of Fannie and Freddie, have to maximize value to the government. And I found that to be astonishing that they would, in essence, bet against a lot of what they were their own portfolio. But I think it speaks to the challenge of being able to engage with them and meaningfully write down programs. The Homekeeper program is a tremendous program, for the unemployed and underemployed. But the reality is that in a lot of these neighborhoods, a lot of them, the amount of houses underwater are 50, 60% underwater, the amount of houses. And the amount of those values are 140% of the mortgages in terms of the value of the house. I mean, that's not being close. So you need to write down these mortgages if we're going to have any chance to be able to do that. So I think from a policy standpoint, I believe that, that we have to come to that realization in a lot of these ways here if we're going to really start turning the corner on this problem.
But I agree that it's the role of a conservator to try to preserve as much as the federal money that exists. But if you're going to, at the end of the day, by taking a view that refinancing is not an option, then you're going to end up with more foreclosures. And if they're going to sell it to you for 60%, of original value, that's a dramatic drop in the conservator's portfolio as well. Wouldn't it be better to refinance, have a responsible borrower, maybe even join, have the conservator join and share depreciation mortgages maybe, so that the federal output is further preserved. It seems to me that taking the view, and this is why I don't know if I'm missing something, but taking the view that conservatorship and preserving the largest corpus of federal investment can only come by either payment or foreclosure misses a tremendous opportunity.
Senator, I totally agree with you. I think you're so right about that. And I'll give you a real life example here in New Jersey. We were working with one of the GSEs. We put an offer in to purchase 29 properties in a very specific neighborhood. We couldn't come to agreement with them on the final price. We ended up purchasing 10 of the 29. We said to them, listen, what's going to happen here is these properties are not going to move. So in any event, so a couple months later, they dropped in price, back to the price where we had offered to them. As they start putting more houses on the inventory, they have to put them at a lower value because those houses drop, and the cycle continues. So to me, sometimes some rational pricing where they can move properties to organizations that have a reuse strategy benefits them in the long run, because when the next houses they have to put on that particular market come out to play, there's at least some momentum or at least some interventions going on that can help stabilize the neighborhoods. But it's crazy to me to hold property out and keep dropping prices when you could have sold them a couple months earlier and still achieve the same price.
You mentioned financing as a challenge. I know that one of the things that we did in the Small Business Act, although it's meant for different purposes, is I have a billion set aside for full faith and credit of the United States for CDFIs. What would you envision the type of help necessary on the financing side, or what conditions would you need to see taking those tranches of property and having responsibly placed back in the marketplace for?
Senator, your work on that has been nothing short of outstanding. I really mean that. It's a game changer for CDFIs, that particular bill. And I can give you a couple of very clear examples of what we think we would do with that type of money. The first is that it would give us an opportunity to develop some patient capital that we can go in and acquire these properties in bulk and then put financing on them to rent them to people for a number of years. That's a clear gap in terms of being able to do that. That's number one, and I think that's a huge opportunity. I think secondly, with regard to working with, for example, the mortgage resolution fund, as we acquire properties and we reset the mortgage, we have to find a permanent financing vehicle for them. I could very easily imagine how the CDFI fund, the bond program, could serve as that alternative financing. We would actually acquire some of those mortgages until they become stabilized and gone through modification periods, and then find an exit strategy for them. So those are just two examples, Senator, that I really believe would go a long way in terms of helping with this housing process.
Assemblyman.
Yes, I just want to follow up on that issue pertaining to putting packages together and allowing financial institutions to take control. I know for the course of my career, in the last 30 years, I've been able to see how this hurts the community rather than help the community. So I would be against any financial institution packaging, being able to give lump sums of property for them to control. As we all know, like I can't say all of us remember in the 80s when we were paying almost 17% of the money. Well, that was a reason why we were paying 17%, because of the fact that the financial institutions was basically in control. And I don't want them, Senator, to get back into that kind of control, because I was blessed enough to be advisor on one of the banks here in Central Jersey. And within 10 years, they have gone from, we're not going to invest in urban communities, we don't see a future. Now, all at once, they want to do more than finance refrigerator cars. They want to finance in the community because they see a future. And they used to use the word land banking. Now I use the word house banking, because of the fact that with all these different programs, with the ability for the government to step in, it's going to come back. But I want it to come back in a way where organizations that's next to me are in control of it, not the banking institutions who basically control the market in terms of what the community basically can look like in terms of putting dollars in the community. But once you give that control to them, then it's like anything else. They make a fortune for 20 years, and we have a downsize like we have for the last 3 or 4 years. So when we start talking about packaging housing together, then I'm confident that I would support any nonprofit organization being in control of that. But if we give this back to the banking industry, and I consider the money makers, it would be devastating. And their record so far has proven to me it's all about making money. Even what's going on right now, this is all about a handful of bankers getting together and poor people being able to be used to the point that at the end of the day, your salary goes towards meeting your needs and paying a mortgage. And you can't even pay that today. So to me, as far as I'm concerned, I have no problem with nonprofits being controlled any type of package. But once we get to a financial institution, I'm hoping that we will study that very hard and make sure that they don't steal the dollars.
Well, I appreciate your concern, and that's why I raised the question earlier that we were talking about. I think Professor Mallach raised the red flag. It's one that I raised, and I think Mr. Meyer has it on tap, that if we were to do tranches of properties with investors, it really has to have a connection at the end of the day with community-based entities who understand the community, know the nature of the market, know the nature of the demand for the housing, and can appropriately deal with it. So I think that would be a critical part. I'd like to just maybe finalize, Professor, on something you said, which I'd like to get your ideas for the record. There are those who suggest that we should eliminate Fannie and Freddie, have them dissolve, and no longer have a federal role. If that were the case, I have my own views on this, but I don't want to prejudice the record. So if that was the case, what do you believe would happen?
Well, what I believe would happen is, if you look from a straight business standpoint at the low down payment, long-term fixed rate mortgage, it doesn't make sense. No banking system that I'm aware of in the world provides low down payment, fixed rate, long-term mortgages unless there is some form of government or quasi-government or something backup behind those mortgages to create a secondary market and secure their value. I think if we do not have Fannie and Freddie or some kind of equivalent system, I think we will end up with a mortgage system that simply will not serve very large parts of our population, because it will require much larger down payments than many people, especially modern income home buyers, can afford. It will put a premium on interest rates if you want a term to say longer than 10 or 15 years. And it will be almost entirely focused on adjustable interest rates, because the idea of locking in a fixed interest rate for a long term, unless it's at an extremely high rate, will simply not be attractive to the lending industry. So I think the notion that has been raised by some people that we can privatize the mortgage industry and that ultimately the private sector will come back and offer the same products without any need for government intervention it's a pipe dream, Senator.
Well, I appreciate that, because I think Fannie and Freddie have to be reformed, but they do not have to be
Reformed big time.
Yeah, they follow the market. That's not something we need them to do. But I think that without a Fannie or Freddie, I would have never, at the end of the day, bought my first home. And a lot of responsible borrowers, who are still responsible borrowers today, would never repurchase their home. And so I look at that, and I look at the present concern that we're having with federal regulators considering setting a down payment standard of 20% across the board, which the Center for Responsible Lending shows that such a rule could push 60% of all credit-worthy borrowers out of the market and disproportionately affect African American and Hispanic families who can be very responsible borrowers, but not if you insist on 20% down, especially in a housing market in northern New Jersey, for example. It would just be, I think, a combination of eliminating Fannie and Freddie and having that would just make it an impossibility at the end of the day.
I want to make sure that we leave people with the knowledge that there are lenders in New Jersey who are making first-time mortgages to homeowners at 30-year fixed rates with only 3 or 5% down with proper counseling, and they're actually holding those mortgages in portfolio in order to get home buyers to get those first houses. And not a lot of banks, but they certainly exist. We have enough of that product for our clients, but it doesn't diminish the need for what I want folks to know that there are those mortgages that are long-term 30-year fixed rates, no points, no private mortgage insurance, that somebody can come into a HUD counseling agency and get information about that are 3%.
And I think the professor's remarks is that without a Fannie or Freddie, you wouldn't have that at scale, to the scale that exists. Yeah. Well, my thanks to all of you for some very, very worthwhile and helpful insights. We will share this with the rest of the committee. Let me bring the hearing to a close. I want to thank all the witnesses for their written and oral testimony, which will continue to be part of the congressional record. I want to thank the Black United Fund for Health and Human Services for so generously hosting this hearing, and particularly its president and CEO, Salowe-Kaye, for hosting us. We appreciate it. It seems to me that after hearing the testimony, it should be clear that there's a great deal the government can do beyond where we're at to help foreclosures by keeping people in their homes, with mortgage modifications, refinancing, by reducing the huge numbers of foreclosed property for sale that are reducing home values, and by dealing effectively with restoring vacant homes that are blighting neighborhoods. And if we take those steps, which I look forward to pushing in the Senate, we can get for a much better day in America. Thank you all for your testimony. The record will remain open for 1 day, so that any members who reads it may in fact have an opportunity, maybe until next week, till next Wednesday, so that any member who reads the testimony may have any questions. If you do get a question from a colleague, please respond to it as quickly as possible. And with that, this hearing is adjourned.